yes, viewers, hello once again, and a warm welcome to our expert guests, Miss Rajia Gilani and Mr. Ahmed Raja Yusufi. Welcome,
Thank you,
madam.
sir.
Welcome, sir, to our show.
Thank you,
Thank
Mr.
you.
Kanth.
So it's such a privilege to have you here
Thank you,
on
sir.
a regular basis to share your expertise with our viewers. So, as we are seeing, the markets are moving in a very narrow range, despite so much of geopolitical events happening. So, our first question would be in terms of what we have seen in the bitumen side of the market is that for the last few months, bitumen has been under the demand side pressure. So, how do you see the revival in the bitumen prices looking forward?
Well, thank you, Mr. Pranav. Actually, I agree with you that during the last few months, bitumen prices were under heavy pressure. This pressure was so too tense in a way that even by the implementation of new policy of exchange rate in pricing formula of bitumen in Iran, we didn't see any rise of bitumen prices, and the fall of bitumen price in Iran continued, although normally it was expected to increase. I think from the perspective of Iran supply chain, the market should be divided into two parts. The first part is India side, which is under the influence of the upcoming election and its frequent fall of bitumen prices during the last few months. We see that in the last announcement, again, there was a fall of around 10 US dollar in the mid of January. The
Right.
other side of market can be allocated to other markets that are going on still, although there is inflationary stagnation and the reduction of demand. But the demand is still potential and available in the market. For example, in China, we are seeing the rise of construction projects these days. Generally, I have to say that we can expect a better situation from February, and the determining factors of crude oil situation and other general factors that determine the situation of market should not be ignored to expect a better and promising situation from February, hopefully.
Thank you. And that we would share your hope and completely agree to that. Now, as a follow up to that, we are saying that the furnace oil prices are stable at the present levels. But do you see it getting support due to the ships avoiding the Red Sea route?
Well, Mr. Pranav, the situation is really complicated and confusing. Geopolitical tension in the Middle East and limited supply helped the price to increase in 2023, but they still couldn't stay high. In November 2023, we see that the Brent crude oil reached the strong resistance at 82 US dollar. And now oil is struggling to go higher. In the first 6 months of 2024, price may increase due to the tension in the Middle East and the limited supply, but they may decrease again in the second half. Financial institutions predict that Brent crude oil will be between 70 to 80 US dollar per barrel this year, and maybe the furnace oil price will not jump more. But however, we see a high level of tension in the region. For example, the last case was observed yesterday and today morning when missile attack between Iran and Pakistan started on their opponent position in each other countries. And we should see and observe the condition of the market situation and how it will be affect on the furnace oil and the fuel and the crude oil. But we see a resistance on the price, even on the crude oil and even on the furnace oil. And maybe the situation is somehow we have a inflation, stagnation, and also situation of the complication in the political situation, and these two somehow cannot work together.
Yes, and we also note with great amount of appreciation your prediction about the crude oil price to be hovering around the 70 and 80 as you had shared last time as well, so which is currently holding true. But I guess the crisis in the Red Sea has been there for a few weeks now. And what took all the observers by surprise is the recent situation between Iran and Pakistan, because this is not something which any of the analysts had foreseen. So, do you think it would be contained fairly quick, or do you see the risk of it escalating further?
Really, we don't know, because one part is a political situation and we don't have enough information about it. But it doesn't seem it will be continued. But in 2021, when the Ukraine and Russia war start, all the market prediction is that the crude oil will be increased up to 120 and it will be stable at that price, but it decreased. We see the same situation in the Red Sea and also the war in the Middle East, that again price increase and also coming down. So the fundamental of the market is working very hard right now in these days, and we should see what will be happening in the next step.
Yeah, we'll hope and observe that things cool down, because it is in nobody's interest to have escalation of
Sure.
any kind of conflict. And thanks for your deep, insightful
Thank you.
views. So thank you.
Thank
Thank
you.
you so
Thank you,
much.
Mr. Point. Thank you for this.
Thanks.
Thank you.